Good morning. US stocks, bonds and the US dollar fell in a revival of the Sell America trade on Tuesday after US President Donald Trump threatened tariffs on various European countries before high-level meetings in Davos amid a growing standoff over his ambitions to take over Greenland. Bitcoin plunged below $90,000, gold hit all-time highs. At the close of trade on Wall Street, the Dow Jones index fell by 871 points or 1.8%. The S&P 500 index slid 143 points or 2.1%, and the tech-heavy Nasdaq index shed 561 points or 2.4%. All three major indexes fell by the most since October 10. The Nasdaq broke below its 50-day moving average, an important technical threshold, while the S&P 500 hovered at the edge, erasing its 2026 gain. The CBOE Volatility Index, or VIX, Wall Street's fear gauge, closed at 20.1 points, a level not seen since November 24. Wall Street's main indexes started the holiday truncated week on a dour note, trading near three-week lows as investors were spooked by fresh tariff threats from US President Donald Trump against Europe amid a dispute over the control of Greenland. As Trump heads to the World Economic Forum, he's stoking a series of disputes with European leaders. Trump hectored the UK over plans to turn over sovereignty of Diego Garcia back to Mauritius, threatened 8 European countries with tariffs for opposing his Greenland demands, and now he's trying to force France to join his board of peace. On Tuesday, US President Trump escalated his war with Europe, threatening to impose 200% tariffs on French wines and champagne after French President Emmanuel Macron was reported to be unwilling to join his board of peace on Gaza. Back on Wall Street, 10 of the 11 S&P 500 sectors were in the red on Tuesday, with consumer discretionary and information technology stocks down the most, each sliding over 2.8%. Norwegian Cruise Line weighed on the consumer sector, sliding 7.5% on geopolitical worries, and as Morgan Stanley lowered its price target on the stock to $28 from $40. Shares of chipmaker Nvidia dropped 4.4% to lead tech shares lower, with traders trimming positions in the AI giant as global trade tensions escalated following US President Donald Trump's latest tariff threat over Greenland. Broadcom shed 5.4%, industrial bellwether and maker of Post-it notes and Scotch tape, 3M, tumbled 7% after forecasting annual adjusted profit below Wall Street expectations. Shares of IT hardware companies traded lower after broker Morgan Stanley downgraded the sector as component costs rise and the firm anticipates softer tech spending. Both Logitech and NetApp shares were downgraded to underweight from equal weight, and shares tumbled 4.5% and 9.4% respectively. Hewlett-Packard Enterprise fell 4.9%. Elsewhere, Intel shares rose 3.4% as Seaport Research upgraded the technology stock to buy from neutral. It also set a price target of $65, implying a nearly 40% increase from Friday's close. With the price of gold hitting a fresh record high and trading above 4,700 US per troy ounce, gold mining stocks were rallying. IM Gold rose 15.5%, Anglo Gold jumped 7.9%, while Goldfields gained 7%. Netflix shares were down over 5% in after-hours trade after reporting a narrow earnings beat. Earnings per share came in at 56 cents versus 55 cents estimated by analysts. Revenue was $12.05 billion versus $11.97 billion forecast by the street. The streaming giant reached 325 million paid global subscribers. Longer-dated US government bond yields rose on Tuesday as the market reacted to turbulence in Japanese government bonds and persistent global tensions stirred by US President Donald Trump's renewed threat of a trade clash with Europe over its proposed acquisition of Greenland. US Treasuries ticked lower after a Danish pension fund, Akademika Pension, said it will exit the US Treasury market by the end of the month. While it only holds about $100 million worth of Treasuries, its statement revived concerns about the financial consequences of US antagonism towards its allies. Japanese bond yields soared to record highs as investors gave a thumbs down to Prime Minister Sanae Takaichi's election pitch to cut taxes and food. Concern around Japan's fiscal outlook sent yields on the nation's 40-year debt rocketing above 4% in the Asian session, the most on record. The US 10-year Treasury yield rose by 6 points to 4.29%, but the US 2-year Treasury yield was steady near 3.6%. European share markets touched their lowest level in nearly 2 weeks on Tuesday as mounting unease over US US President Donald Trump's tariff threat over Greenland hurt optimism from earlier in the month. The Pan-European Stoxx 600 index ended 0.7% lower, marking its biggest two-day drop in 2 months. France's CAC 40 index dropped 0.6% to touch a one-month low, while Germany's DAX index slipped 1%. Sectors on Europe's main share index were broadly in decline, led by real estate's 1.9% fall, pressured by the steepening of Eurozone bond yields. Luxury group LVMH shares fell 2.2% as US President Trump threatened to hit French wines and champagnes with 200% tariffs. In commodity markets, global oil prices rose on Tuesday as investors monitored US President Donald Trump's tariff threats against European states that oppose his push to acquire Greenland. Prices also drew support from the temporary suspension of output at Kazakhstan's oil fields. The Brent crude price rose by 1.5% to $64.92 a barrel, and the US NYMEX crude price also gained 1.5% to $60.34 a barrel. The gold futures price surged $170.40 an ounce, or 3.7% to $4,765.80 an ounce, as escalating geopolitical tensions boosted safe haven demand. Bullion reached a record high of $4,765.93 an ounce earlier in the session. Copper futures dipped 0.3%, with industrial buyers deterred by elevated prices when inventory levels are at multi-year highs. Iron ore futures fell by 0.6% to $106.54 a tonne, down for a fourth straight session, as an accident at a Chinese steel factory triggered concerns over demand for the steelmaking ingredient. Australian shares are poised to fall at the open on Wednesday following a poor night of trade on Wall Street. According to the latest SPI futures, the ASX 200 index is expected to open the day 50 points or 0.6% lower, down for a third successive session. Aussie shares logged their worst session in over a month on Tuesday as interest rate hike jitters knocked heavyweight financials, which slid 1.1%. Attention is now on domestic labour force data due on Thursday and next week's December quarter inflation print, seen as pivotal for the Reserve Bank's rate trajectory. The Reserve Bank is scheduled to meet on February 3rd, with the market now expecting a 30% chance of a rate hike. On the data docket today, Australian residential building and engineering construction activity data are scheduled for the September quarter. Mining giant Rio Tinto will be one to watch when it releases its fourth quarter and full year production update. The consensus estimate for full year copper production is of 863,000 tonnes, iron ore production of 322,756 metric tonnes, and aluminium production of 3,224 tonnes is also expected. Telix Pharmaceuticals shares will also be on watch after releasing an update on its performance in financial year 2025. On Wednesday, stateside, the National Association of Realtors pending home sales index for December is expected alongside October construction spending figures. Johnson & Johnson will report fourth quarter results on Wednesday. Investors will watch out for the company's 2026 forecast and comments on the Trump administration's tariff and drug pricing policies. The US dollar posted its largest daily fall in over a month on Tuesday after White House threats to Europe over the future of Greenland triggered a broad sell-off across US assets. The Aussie dollar dipped from 67.46 US cents to 67.23 US cents and was last trading near 67.35 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.